I've been traveling for about a week, but I did notice this one pattern. I haven't made any videos lately, but it's because I've been traveling, so I'll get back to the daily update soon. Looking at this Nasdaq, though, I was watching it, watching my VPS when I traveled and watching the trades. And on the @nq.d, you see this symbol in Tradestation. What this is, @nq.d, is the daily bar for the day session, not the 24-hour session, but from 8:30 to 3:15. And I wrote an indicator to, let's just go with military time, 15:15 Central Standard Time. And it's just a day session. So you can do @nq, which is the 24-hour daily bar, or the @nq.d, which is just the day session daily bar. And Tradestation has these .d symbols just for the stock indexes, not other markets. And so you can see that on the daily session, since this date right here, March 25th, it started right here, March 25th, started a series of days where the close was greater than the open every single day until Tuesday, April the 13th. And so 13 days in a row. Yesterday was the first day, and it resets the count. This indicator that I created at the bottom counts those days, consecutive days in a row where the close is greater than the open, and then it resets that count. Here is the easy language for this that I want to share with you, and it's very simple. If the condition 1, if the close is greater than the open, value 1 is equal to 0. If condition 1, which is this, then value 1 is equal to the previous value plus 1. And then if condition 1 is equal to false, then value equals 0. That resets it, then we plot it. So it's a very simple, easy language indicator, and you can format this in different ways. But how rare is this pattern? Let's take a look at multiple years back so you can see how rare it is for the Nasdaq to do this. I think it's, a lot of times you get a 3-day holiday around Easter, before and after you get that rally, and this one kept going for a while. Seasonal pattern around a 3-day holiday can oftentimes be bullish during light volume, and you see 13 days in a row. It doesn't happen anywhere on this chart going back to 2014. Let's compress it some more. I've compressed it as far as I can. So let's see if there are more days where this happens. So it does happen here. Here is the high on this is 14. So it happened on February of 2011. There were 14 days in a row. What happened after that? A little bit of a sell-off. So this straight line, that was the end of the rally in February of 2011. That was the end, that blow-off top, I guess you could say, made highs past this point right here. And it really had a good run, just similar to what we just saw on the Nasdaq. Had a good run, made all-time highs, and then you see pretty much volatility for the rest of the year. And then the Nasdaq goes into trend mode. So it's not like it crashes. It's not like an all-time bear market where it crashes 90%, but it does pull back some. You see some here, also 14 days in a row. A little bit of a pullback, but then it continues. So it's not a big crash, but it can signal a pullback in prices just a little bit, if not a lot, depending on other circumstances. So as we go back to 2001, I only see 2 days where this number gets to 14. Here it is at 11, and then it pulls back, but the trend is still up. So it can call a pullback when it gets this extreme, but there's not a lot of data. There's not a lot of data points. You don't see a huge number of data points at 13 and 14. Here's 11. It hits 11 and it pulls back a little bit, but the trend continues, and then there's a sharper sell-off right there. So I expect this to cool off a little bit. I could be wrong. If you're looking at 3 or 4 scenarios going back almost 20 years, then you don't have enough, you don't have a lot of data points to be statistically significant. You can't take 3 or 4 scenarios, but that's what I'm looking at. Note this, it's observable. It's observable, no action needed, in my opinion, but it does explain this runaway rally, how extreme it is, And this is the EasyLanguage coding lesson you can take a look at if you would like to create this indicator on your end. And one other thing you can do is you can format this. You can double click it. You can use a histogram, and it's might be easier to see. You might use a different color. You can click on color and you can select green. Since these are up days, you can create the opposite indicator for down days, and it's the same color as the chart though if you do that. So let's use blue. Let's use a blue color. So blue, pick any color you want. Brighter colors sometimes pop better. So another thing you could do is you could look at this on the 24-hour chart and you don't see the same thing. This is the day session chart. So during the day session, straight up, during the 24-hour chart, you don't see the same thing. Back here, you see a high of 12, and it keeps going on the 24-hour chart until here. And so the day session, though, you can also see this on the ES. So if you double-click on that and you select at ES.D, we saw 13 days in a row on the E-mini S&P as well at all-time highs. So probably, these streaks don't last forever, and there is a little bit of a sideways to pullback action in here, potential, but you can't expect to see necessarily this, although that could happen at any time. So that is what I want to share with you today, this unusual pattern, open to close, the number of days, it says percentage open to close, but it's really the number of days that the consecutive days where the close is greater than the open.